The two investment guys join us now, and we're talking markets today. And the markets appear to be, at first glance, to be a bit frothy, guys. But you're saying that not necessarily the case.
Well, I think you have to step away and look at it. We're not quite 4 months into the year. A lot of the financial news media notes have been very colorful. But really, we haven't gained any ground year to date in the S&P 500, for instance. The TSX is up 6% this year, but the S&P 500 is flat. Yeah. The Dow is flat. Most of the European markets, except for France, are flat. And the Asian markets are actually negative. Mm-hmm. If you looked at everything that you hear about all-time highs or record highs or near highs and stuff, you'd think we'd be raging out of the starting gate, and that's not actually the case. It's just pretty colorful.
Yeah. Chris, is it time to think defensive at all? I mean, in the last recession, stocks like Walmart and McDonald's did well, for example.
Mm-hmm. Well, I think, a good balanced approach in this environment that we've been in for quite a while is still a good place to position yourself in your portfolio. We've talked a lot about good quality dividend paying stocks, and quality and dividend yield is in and of itself a defensive strategy, and we still think that's valid today.
Do you think the emerging markets have been oversold a little bit? I mean, they got hit pretty hard.
It's difficult to put more of a precise evaluation on emerging markets because of the variability of growth and the speed down there of the growth. But typically, the reactions are overdone. Now, that's not to suggest that you should rush out and do allocations in the emerging market space, but they're cheaper than they were 4 months ago. Let's put it that way. I'd just be careful with that.
Brazil was an example. Do you want to touch on Brazil? But they've been hit pretty hard.
Yeah, I think if you look at a lot of the economies in South America, it's been a challenging environment. Let's remember they're very much like Canada, commodity producing, and China is transitioning their economy away from being the builder to a consumption-driven economy. And so it's not only impacted places like Canada and Australia, it's impacted a lot of the economies in South America, most noticeably Venezuela, Argentina are struggling big time.
And of course, the U.S. market is the one that's really driving the current rebound.
Well, that's, by far, Tim, the most meaningful of the economies that we follow. We've talked about the slow, steady growth that we've seen down there, save and except the data that came out of the harsh winter. Saw a bit of an overreaction in the markets there, starting to think that maybe this recovery down there is faltering. Actually, it wasn't. It was winter related. So we continue to see these data points that we follow just trending along slowly, indicative of a slow growth recovery. And people need to remember it's not a straight line. It is a little bumpy on the way through this, but we're encouraged by what we're seeing.
All right, thanks for joining us, guys. And Chris, if our viewers would like to contact you guys?
Yeah, absolutely. Want to thank you again for your questions and comments. Please keep them coming. You can contact Grant and I at twoinvestmentguys.com.